Okay, hi all. Today we have Mr. David with us. So to talk about him, like I was just going through his bio, a lot of things he has done. He has published 2 books. He is the CEO of Davos in the Desert. He is the managing director of Merit Investment Bank. He's again the CEO and founder of Certified Patent Valuation Analyst. So thanks for joining the call, David. Thanks for being here.
It's a pleasure, and I'm a user and subscriber to Tracxn, and I find it to be a very helpful, very powerful tool.
Thank you, David, for that feedback. So to start with, some only very basic questions I'm having, fundamental questions only I'm having here. So can you just walk us through the background, your background, how you came to this industry, and some key milestones you are having in your professional journey?
Yeah, so basically, I'm an investment banker with Merit Investment Bank. We're a boutique investment bank that serves the lower middle market. Probably about 70% of our business consists of representing business owners that are looking to sell their companies. Maybe 20-25% consists of representing acquirers that are looking to make roll-ups or strategic acquisitions, and a little bit in terms of raising capital at the B round and beyond. One of the primary differentiating factor that I bring to the table is I'm one of the few investment bankers that knows something about patents. And in many cases, especially with high-tech companies, maybe 80% of their value resides in their intellectual property. And if you can't articulate what that intellectual property is worth, the trade secrets, the trademarks, the patents, design patents, the investment banker is hurting his client because he can't get the full value that the client is entitled to.
Great. So you started as an investment banker, and later you understood the importance of patent in M&A, and then you slowly shifted your focus more in M&A. Is it like more into patents? Is it like that?
Actually, the other way around. I've been in finance my whole career, but I've been in valuation for many years and developed an expertise in valuing intangibles, patents, and then became an investment banker about 7 years ago. So I have a very strong valuation background.
Okay, great. So is there any memorable deal or a recent deal which you have done which is particularly memorable for you for some special reason?
Yeah, so sometimes the engagements start off where I do a valuation, and I learn a lot about the company's patents, technology, about the company itself, about its industry. And then a client wants to sell a division, do a spin-off, sell its company. And so we're favorably positioned to represent companies in those situations. Patents are also very important because there's often tension between what price the transaction is going to clear at. You know, the seller always wants to get more money, the buyer always wants to pay less, but you can structure deals using patents in a variety of ways. If you'd like, I can give you a couple of examples.
Yes, it's definitely. I'm just looking forward for some examples.
So let's say the buyer only wants to pay $50 million for a company and the seller wants $60 million. So maybe the deal can't clear at those with that different mindset of valuation. But you can say something like, we'll pay $50 million, and if we're able to license the patents to a different field of use, then we'll pay you a percent of the royalties that we generate. So sometimes the patents can be suitable for different industries. The company and the acquirer may only operate in the auto industry, but if they're able to take the patents and license them to a different industry and get extra money, that extra money can be shared. You also have a similar situation with asserting the patents, which means litigating the patents against infringers. So that can be a store of value. The patents can represent value because you can sue infringers going back 6 years. So there can be a lot of infringement, and you can pursue those infringers, collect money, and share that money, and that additional money could help resolve the tension in the different pricing expectations.
Great. So a following question there. So I understand that you are also giving certification for like a patent valuation analyst designation. So I just want to understand like a basic, a top level basic on like what kind of teachings you are having there, like what in that certification, what are you teaching?
Okay, so this is a little bit separate from the investment banking, but you're right. I did create a designation that teaches people how to value patents. It's called Certified Patent Valuation Analyst designation. The website is cpva.info. We've run this training in much of the world, all over the US, Canada, London about 20 times, all over Europe, India, Israel, Dubai, China, Singapore, and so on. But we have a valuation component of that program, and we go over maybe 30 or 40 different methodologies. Some of them are, the fundamental methodologies like the income, market, cost method. And then some of the methodologies are more sophisticated, like Monte Carlo, binomial lattice, Markov chains, things like that. And then we also go into quite some depth with scrutinizing patents themselves. So patents are pretty complicated, and there's a lot of data that comes out of patents. So we look at everything from the claims, the specifications, backward, forward citation, chain of title, a lot of things. But, maybe a couple of ways your listeners can get a quick estimate as to what their patents are worth. One is through litigation. So if somebody's infringing your patent, you basically look at how much product have they sold. Maybe they sold $100 million of infringing product. And then you basically try to figure out what is a reasonable royalty for them to have paid. And maybe it's 7%. So you do a little bit of math, but basically it's the base, the $100 million of infringement times a reasonable royalty rate of let's say 7%. So it would be $7 million in damages. Another way to look at it is if a company is using a patent by itself, you can say that our company is selling product that is protected by these patents, and we're selling $200 million of product, and the value of the patent is the relief from royalty that we're enjoying. So if you own the patent, I would have to pay you 4%. So I'm relieved of paying that because I own the patent. So you can multiply the 4% I would otherwise have to pay you times the amount of product I'm selling and get an idea there. And then a final way of I can mention now is you can look at the with and without method. So you can say I'm able to sell my product at a premium price for like $20 a unit because I have a patent protected feature that allows me to sell it more, and everybody else selling their product for $15. So the patent is allowing me to receive $5 more per unit. Maybe it costs me $1 more to produce that feature. So maybe it's $4 that I'm making every time I sell a unit because of the patent. Then you multiply that $4 a unit times the number of units. There's a couple of different quick ideas I can share with your audience for valuing patents.
That's great. So I'm dealing with a lot of investment bankers, and I think this area is very niche. So most of the times I never heard about my investment banking clients talking about patents. So that's very unique way I think you're adopting here.
Yeah, it's not appropriate for every situation. If there's no patents or no intellectual property, then you don't need the courses I teach, or you don't need this discussion. But a lot of companies have some patents or some intellectual property, and many companies have a lot of patents. A lot of companies spend a lot of money on patents, and you spend the money on patents because you want to make a return on your investment. It's just that simple. It's flattering and it's exciting to receive a patent, but the CEOs of companies that support the budgets that go into patenting, they want to make a return on their investments. And if you don't articulate the value of your patents, the buyer is not going to pay you for it. So you have to be able to be proactive and to articulate the value associated with your patents. Otherwise, you're never going to make a return of investment, let alone a return on investment.
Great. So basically, a company which is having more patents, if they are looking for exit, so basically they can approach you. You will be valuing the patents, and based on the patent valuation, you'll be giving the valuation of the company, which the buyer would be paying. That's my understanding.
Yeah, so we definitely value patents and value companies that have these patents. And so the report itself is a negotiating tool. The buyer may not pay everything that we think they should, but it does help the seller make an argument that we deserve more than the buyer thinks. In some cases, the patents can be worth more than the whole company. So let's say that the company is small, maybe it's a family business, and they have some patents, and maybe they sell a medical device, but it's a small family-owned business. There's only so much they can sell. If they would license the patents to Johnson & Johnson, Johnson & Johnson could sell maybe 100 times as much product. And the family would get a royalty on that, and those royalties could be more than the cash flow they're generating. So sometimes the value of the patents can be more than the value of the whole company.
Great. So we also in Tracxn also we understood the importance of patents, and now recently we have developed our patent database. So you go to the legal entity and then you can see the different patents they are having. So, but still it is work in progress. But we also have understood the importance of patent in this industry.
Well, that's very important. That's another value-added feature that Tracxn is offering, and Tracxn is bombarding its customers with value-added features. It's hard to keep up with them, and thank goodness you have a great customer service, because people like me wouldn't be able to keep up with all the features if you didn't have that great customer service that walks you through and teaches you how to use all those new features.
Thank you for your feedback. So I also want to ask this question, now everyone, the buzzword is AI. So with AI coming into the picture and with tools like Tracxn in the market, how is that helping you in your daily work?
So Tracxn is helpful because I like to understand the industry. I like to understand the competitors, the other players, the potential licensees of my client company. And the taxonomy that Tracxn offers is great. With just a couple of mouse clicks, you can do searches and download files of a lot of competitors and sort them by countries and size and all of these things. So that's really helpful. So that's a great tool. Just some other tools are very good for searching. Like I use Perplexity. Those tools are good. They're very good, but they're not perfect. I've noticed that sometimes I can do the search and then come back 2 hours later, do the same search, and the results are a little bit different. And sometimes the sources are not, quite so good. And, so it's great, but it's not perfect. So those kinds of tools, can help accelerate the production of a report. I haven't really used any of those tools to write any of the text, or they can't prepare any models. But it's still an advancement. I look at it like, we had spell check, and then we have searching on the internet. All that was good. And so AI is a step improvement for me. I don't think it's a complete game changer for me, though.
Great. So, I recently read an article where a Goldman Sachs senior executive in an interview was saying that in 2026 they are expecting a record-breaking M&A industry which is going to happen next year. So I just want to understand, what's your focus for next year? Are you like what kind of industries you're working? What's your big focus next?
Yeah, so I'm optimistic that 2026 will be a great year for investment banking. We thought it would be 2025, but the first half of the year, at least, was a bit slower than we thought. But I think we got some legislation passed in the United States. The big beautiful bill passed, and we have clarity on things, and very good things were in the bill, such as the acceleration of the expensing of research. So you can expense a lot more research, and that because your expenses are higher now, you don't have to amortize or capitalize as much. Your taxes are less. Your cash flow is higher. So that's a very big thing. Tariffs don't seem to be as bad as many people fear, and I think inflation is largely under control or much better than it has been. Very strong chance that we'll get a couple of rate cuts, at least in the United States, which we need. And capital will be a little bit looser. There's fewer regulations under the Trump administration. More industries are being opened up, like oil services and things like that. So I'm optimistic. We're already seeing that our business is picking up. Getting a few more clients and more inquiries. We still have to be very selective. It is important that an investment banker be selective and really only focus on the deals that they're highly confident that they can close to the satisfaction of their clients. So you don't want to spread yourself too thin. You want to be able to give your clients great customer service.
Yes, all the best. We all are hoping for a great 2026 to come. So one final question I'm having here, what piece of advice you are having for someone who is just venturing into the investment banking industry? What's your advice to them?
Yeah, I think you have to be intellectually curious. The work is much more enjoyable if you like learning as you go. You should be able to learn something every day, from deal structuring to legal issues to accounting issues to negotiating tips to developing PowerPoints to the different industries. So it's very, very stimulating. And I think you should enjoy that. It's not for somebody that wants to do the same thing all the time. You have to work very hard. You have to work beyond regular 9 to 5 hours. You have to be personable because sometimes you spend several days with a client, and sometimes I was driving with a client for about 6 hours for 2 days last week. And so you have to try to be personable. And you have to realize that there is risk. Not every deal will close, or not every deal will close at the level you thought it would. And so you can, make a big commitment and not get the payoff that you want in some cases. But in other cases, it's the other way around. The payoff is bigger than you expected with putting less work into it. Be good with Excel. Be good with calculating numbers. Have a good memory, whatever you can do to have a good memory. And if you don't have a great memory, which maybe that's most of us, take very good notes, document things as much as you can, be very granular, and don't be afraid to ask questions. You have to ask questions, even if they're very basic. Sometimes a CEO will say something that people don't understand and nobody wants to ask because they think they may appear to be uninformed. But you need to ask those questions. You need to understand as much about the clients that you're representing as possible. So be intellectually curious. Don't be afraid to ask any question, no matter how basic. Because if you don't have that basic understanding, you're not going to be able to represent the client. And be prepared to work hard. But try to enjoy it too.
Yes. So I can see like how passionate you are when you are talking here. So thanks a lot for joining on the call with us. Thanks a lot for taking your busy time schedule and sharing some like words of wisdom which you already got through your experience. Like also happy to know that you are getting a lot of value from Tracxn and you're using it on your daily workflow also. So, I'm happy that I was able to help you in those regards. And thanks again for joining with us.
Well, thank you very much for the opportunity to participate in the call. Thank you.
Thank you, and have a very good day.